What if I told you that to have ultimate control of your money, to build unbelievable amounts of wealth, to do it on a guaranteed basis, all you had to do is change one thing. Just add one step to your life. You'd sit back and you'd say,
just seems too good to be true.
But what if I said it's not? What if I said it's been around for hundreds of years, been used by all the largest corporations that you have come to use and love every single day of your life? And not only that, it's the number one thing that traditional banks buy with their tier one capital. Would you still sit there and say, that sounds too good to be true? Well, you probably wouldn't. You'd probably say, tell me, show me, indulge me. Well, that's what we're gonna do. My name's Chris Naugle, and this is What Now, What's Next. You know, Will Rogers came up with an unbelievable quote that I think is incredibly important to what we're going to talk about today, which is becoming your own bank. Will Rogers said this. He said, the problem in America is not what people don't know. He went on to say, the problem in America is what people think they know that just ain't so. I'm gonna show you how to take back control of your money. I'm gonna show you how by just changing one thing, you can change everything when it comes to your wealth. And I'm gonna show you how this has been done by Fortune 100 companies, Fortune 500 companies, traditional banks, and the wealthiest families in history. I'm literally gonna show you how to recycle and recapture the money that you give away every single day. And all of this, including how to get all the money back for every single car you will ever buy, drive, and own. All of this involves changing one thing. So let's dive in. Many years ago, when I was a young man,
you know Smithers, when I was a young buck.
23, I entered the Wall Street world.
You ever hear about Wall Street, Morty?
I became a financial advisor for a very well-known company we're gonna leave out. And during this whole time I rose to the top, I became one of the top performing advisors at this company. I literally did everything everybody else was unwilling to do.
Break number one.
And I continued on this journey for many years until I hit my 14th year. I started doing some real estate investing.
It's free real estate.
And in doing real estate investing, I needed to borrow money for these flips and these rentals. So I found a group of people. One of them's name was Greg and another one's name was Mike.
But Mike, what about Greg?
And I'll never forget the time I'm sitting in Salt Lake City at a cheesecake factory, sitting there with Mike, and I'm pitching a deal to Mike to lend money on. And I lead into Mike and I say, Mike, you've been lending me a lot of money on these real estate deals, and I very much appreciate that.
It's free real estate.
But Mike, can you tell me, where does all this
free real
money come from? And Mike very quickly, just like this, he says, well, it comes from my bank. And I said, no, what do you mean? Well, my private bank. And I sit back and I'm like, Mike, you dirty dog.
Take your stinking paws off me, you damn dirty dog.
I knew you were wealthy, but you got yourself a bank? Dude, why are we in Cheesecake Factory? Let's go to your bank. Show me this bank. And he leans in, he says, it's not a physical bank. I set up a bank using a giant mutually owned insurance company that pays dividends. And I said, well, what do you mean?
What do you mean?
And he says to me,
it's free real estate.
I was shown how to create my own private banking system by using, and this is where I kind of lost, there must have been some sound in my head that zoned everything else out. And he says, by opening a specially designed and engineered whole life insurance policy. You see, what I heard, being a financial advisor of after 14 years, I heard whole life insurance in slow motion. Because I immediately thought to myself, this idiot.
Peter, this is idiotic.
This guy was bamboozled by somebody who came in and sold him a whole life insurance policy, telling him it would work for this and it doesn't. And I said that to him. I said, Mike, listen, I'm a financial advisor. Whole life insurance doesn't work the way you just described. Mike very calmly leans into me and he says, Chris, if whole life doesn't work the way that I just explained, then how have I been doing it? And I sat back and I said, you got a point. Teach me. And he said, I can't. You got to get a hold of this guy, Brent. This guy, Brent, showed me everything that I know, and I've been doing this forever, and it works exactly how I just explained. I put money into this specially designed and engineered whole life. I immediately take that money out immediately in the next 30 days, and I lend that money to you and lots of other people like you, and you pay me 12 to 14%, and I make a bunch of money. And then he said to me one key thing that I didn't understand then. He said, I earn uninterrupted compound interest.
Perhaps with compound interest.
On every dollar I put into this specially designed whole life. So clearly I was excited. I ran out and I called this Brent guy, and this Brent guy gets on the phone. He was very nice. And I said, I'm a financial advisor. I just met with Mike and he was telling me about this private bank you set him up with. I'm puking. I'm a blender with its top off. And he stops. He says, okay, great. Have you seen the 90-minute video? And I'm like, what 90-minute video? He's like, well, I made a 90-minute video that's a prerequisite purchase it to do a call with me. Have you watched that? I said, no, but I'm a financial advisor. I know what this is. I know all about whole life. Just teach me. And he stops me and he says, after you watch the video, we can gladly do a call. Click. So that Sunday, with the biggest cup of coffee, probably about this size.
That's quite big. Impressive.
I waltzed into my basement with a pen in hand and a pad of paper, and I hit play. 90 minutes went by like it was 15 minutes, and I had 4 pages of notes, but the one thing I had seen in this video is I had seen the answer. I had seen something that had been there all the years I was an advisor, but it had been there for so much longer, hundreds of years, used by the wealthiest families, the Rothschilds, the Rockefellers, the J.P. Morgans, the Stanleys, all these great banking families. Then I found out Warren Buffett uses this. I found out the current sitting president today uses this. I found out it's used in politics. It's used in corporate use. I found out that banks were the #1 users of exactly what I just learned. I was in. I had seen everything I needed to see, but then I had one troubling question in my mind. I'm a financial advisor, 14 years. I've worked for these giant insurance companies. Why wasn't I shown this? How many lives could I have changed if I was taught this when I was a young advisor, when I could have went out and told all my clients about this amazing banking system that was pioneered by R. Nelson Nash, the late R. Nelson Nash, and he wrote the book Becoming Your Own Banker, which is basically an outline. He architected the infinite banking concept, and I'd never heard of this before. I'd heard whispers about bully. I'd heard whispers about Coley, but I never understood how corporations and banks actually use these specially designed and engineered whole life policies until that moment. That 90-minute video is still available today. I'll put it up at the end of this video so you can also watch it, and you can have that moment, but you probably don't need the giant cup of coffee because you won't drink it. That's why you don't need it. The video will do all the talking for you and teach you exactly how to take back control by changing one thing. So let's get into it. I'm going to give you a high-level view of what the infinite banking concept is. But let me tell you what it's not. That's more important. You know what the infinite banking concept is not? The infinite banking concept is not a product. The infinite banking concept is not the whole life. So many people want to think that the product, the magic whole life, specially designed and engineered to do this, is all you need. But it's not. Here's what you need. You need to understand the process.
All that truly matters is the process.
You see, the infinite banking concept is a process. It is a process of you taking back the banking functions in your life. But what does that mean? Well, let's begin. All of you, at one point or another, you go to work. I hope you're working now. And what you do is you work for these. Money. Money is nothing more than a means of exchange. Money for food, food for money. Money for house, house for money. Money for car, car for money, and so on and so forth. We work for this. We trade our hours and our labor or our mind to earn these dollars. And then what do we do with these dollars? Well, we take them and we waltz into our local traditional bank and we deposit that money in our bank. Today, most of it's auto deposit. And how much does the bank pay you for those deposits? 0? Maybe you're earning 1% on those deposits?
0, 1.
And what does the bank do? Do they put that money in the vault that you're staring at when you're making the deposit? They put it back there with your name on it? They literally say, sir, what's your name? And they write your name on the money. They put it in a little box and they put it in the vault. Is that what they do with your cash? Nope. They make your money go to work for them. But you see, they didn't work for that money. They just convinced you should give up control of it to the bank. But then the bank knows something you don't know. They know how to make that money go to work for them. And what do? They lend it back to you. They lend it to your neighbor. They lend it to your friend Denny. They lend it to a whole bunch of different people at a rate that's higher than what they're paying you. So if they pay you 1 and they make a car loan to Denny, what did they make? If the car loan was 5 and they paid you 1, they made a spread of 4. So with this concept, it involves adding one step, changing just one thing.
But just one thing.
What?
And that one thing would be the money that you earned. You have to start conditioning and training yourself to follow the laws of wealth. And law number 1 says you should take 1/10 of the money you earn. So right now, if I'm holding $500,
$500?
okay, you should take 1/10 of that or 10% of that. No, we're just going to do this. And you're going to take and change where that money goes first. That's the one change. And where it should go first is into your own bank. You give up enough money to their bank, you have to start saving and keeping money in your bank. And what is your bank? By now you should know this. It is that specially designed and engineered whole life. But we're only going to use that as a machine. We need the machine, which is the whole life, for one reason and one reason only. That machine allows us to earn uninterrupted uninterrupted compound interest.
Compound interest.
Because once the money goes into that machine, if designed properly, and this is something that not all insurance agents and not all financial advisors know how to do, this is very specialized to design that machine the proper way to do what I'm about to tell you. But if it is designed properly, you will have access to some of that money you deposited immediately.
Effective immediately.
In the next 30 days. How much? 60 to 90%. So let's just pretend that that 10% that you put in there is $100 for simple math. You put 1/10 of the money you earned, which we're just going to assume is $100. So we do that every single month. One month you put 100 in, the next month you put another 100 in, the next month another 100, the next month another 100, and so on, until it accumulates up to $500. Now, that money became available to you immediately in the first 30 days of the deposit. But that, you would never take the money out of your bank unless you had somewhere for that money to go.
Never.
The bank doesn't take your deposits and send that money to work unless it has somewhere to go. And where is somewhere? Well, that's the person that walks in the door for the car loan. That's the person that needs a loan for their house. They're buying a rental. They're buying a boat, whatever it is.
My van finally got a break. I just need a little moolah to get my imp out of hock. How about a little loan ski?
All those things, those loans, are opportunities for the bank because the bank is in control of the money. But now you've changed one thing, and that now puts you in control of this money. So let's just assume you have $500. Simple math, okay? There are minimums for doing this, and that minimum is add a zero after your age. I'm 44, so if I add a zero, that's $440. That's my minimum per month, just so you can figure out what your minimum is. Your maximum, as much as you want. So I got $500 in there. Now, the name of the game when it comes to the infinite banking concept is to take back the banking functions in your life. So the first thing you would do is you would look at, where is all your money going? Remember, we made all that money, but we didn't put all the money into the private banking policy. We only put 10%. So all the rest of that money that went into the traditional bank, where did that money go? It went to somebody else's bank. Your car payment, your mortgage payment, the boat payment, the credit card payments, the line of credit payments, the food, the diapers, the groceries, all that good stuff is where that money went.
Good stuff.
It's gone forever. It will never come back. But one thing that we can do is we can take all the money that you're giving away and we can figure out how to take some of it back. Well, what money can we take back? Well, let's start with the credit cards, because those are the worst. Every month you make a monthly payment to a credit card for whatever the interest rate is on the balance that you have. And if we took all your credit cards and we put them in order from lowest balance to highest balance, we now have a fighting shot of taking that money back.
So you're telling me there's a chance?
So let's just assume that your lowest balance credit card is $500, okay? And let's just pretend that that lowest balance is being charged 24.99% by that credit card company. That means every month you're giving away the equivalent of 24.99% annually. Because if that's the interest rate, 24.99, every month you give away 1/12 of that money every month is being given away. So now our goal is to take that money back. So how do we do that? Well, we change whose bank controls the debt. We take the $500 that was in that specially designed and engineered whole life. I'm holding it right here. And we take that money out as a loan from the insurance company. Now, why would I take it as a loan? Because if I owned a bank, I would take loans from my bank, wouldn't I? Because if the insurance company is paying me a higher interest rate than they're charging me to borrow the money, doesn't that make sense to leave my money in the account and allow the insurance company to lend me part of my death benefit while I'm living? Because that's what we're doing. When we take loans from our insurance policies, we are taking part of our death benefit early. The insurance company gives us that death benefit early in the form of a loan, and they charge us interest. The interest rate that they charge us on that loan is less than the interest rate and dividend that they pay us on the money that sits in the account. Because you're doing this, $500, which is what I'm holding right here, I got $500, which I'm going to use to pay off that credit card. This $500 was taken from my private bank, that whole life policy. But there's still $500 in my whole life account because I didn't take $500 from my account. I used my $500 that's in my account to collateralize a loan from the insurance company, and the loan from the insurance company never needs to be paid back until the day I die.
Till when?
Not too long, just till we die.
Because the insurance company lent me part of my death benefit. Everybody follow that? If you didn't, watch the video that we're going to post at the end. I'm holding $500. I pay off that credit card. Now remember, that credit card is the lowest balance. And that credit card, I was paying 24.99% annual. So every month I was giving whatever, we'll call it $100 away every month was going to that credit card. But I just paid the credit card off. I no longer owe them a monthly payment, but I paid that credit card off with a loan from my bank. So If I owned a bank, which now I do, if I owned a bank, I would treat my bank's money the same way I treat the credit card company's money. I would treat my bank's money the same way I treat somebody else's bank. So therefore, if I was paying $100 a month to the credit card, i.e. the bank that lent me the money for the credit card, then I should be okay making that same $100 payment, but now I'm going to make it back to my policy. That $100 goes back into my bank, which means now I have an extra $100 that I can take out next time. But that $100 isn't just $100. That $100 represents 24.99% interest. That's the amount I was giving away. That's the amount I'm taking back. And I continue to keep paying my bank back that money for the exact same amount of time it would have taken me to pay back that credit card company's balance. You see, it's all the same. All I'm doing is changing one thing. And by changing one thing, I just made money twice. Can you guys all figure out exactly how I made money twice? If you remember how a bank makes money, they pay you 1% on your deposit. They lend that money out at 5%. If you remember the Denny example, that was a 4-point spread. They made 4% for doing nothing other than making your money go to work. So now you're the bank. So you think the same way. If the insurance company's paying you 6 and they're lending you the money at 4, what's your spread? Your gross spread is 2. That's making money once. And how did you make money twice? You performed the infinite banking concept, the process. You paid off the credit card. You took the $100 you were given the credit card and you put that money back into your account, recycling and recapturing 24.99% interest, and then doing it every month for 12 months. You're literally doing the same thing a bank does every single day, and you're profiting twice from the same transaction. Now, how many times can you do that? Take credit cards out of the way, take debts out of the way. Let's go to cars. Let's just say you saved enough money in your policy to pay off your car or buy a new car, whichever way, doesn't matter. You pay off your car. Your car payment was $700 a month. Once you paid off the car with a loan from your bank, wouldn't it just make sense to make that same $700 monthly payment from that you used to give away to somebody else's bank, make that payment back to your bank? See, the cool part about this is every month you have $700 more to use because you're taking back the money that you're giving away today. But when you have no more debts and you own all the cars with your private banking, all the things that you would normally finance with a bank are now financed by your private bank. What's next? Lending, investing. Whatever you do to make money is next.
This year I invested in pumpkins. They've been going up the whole month of October. And I got a feeling they're going to peak right around January.
Because now your money has to go to work for you. I choose to lend my money out through privatemoneyclub.com. That's how I do it. How do banks make money? They lend money. So I just said banks are way smarter than me. I'm just going to follow the same process a bank does. Folks, I want you to envision, just as a quick recap, what we just discussed. The first thing we did is we changed one thing, and that was where your savings goes first. If you remember, we didn't put the money in someone else's bank. We changed it and put it into our bank. Then when it hit our bank, we found a way to make our money go to work for us, paying off credit cards, buying cars, paying off boat loans, or investing that money or lending that money through privatemoneyclub.com. But whatever that money earns for me by working for me, I then take the interest and I then put that interest back into my bank. Because once you become the bank, why would you ever put money in somebody else's bank? Well, you'd still continue to put money in someone else's bank to pay groceries, all the little things, but you would never save money, and you would never take any interest that you earn and put it back in somebody else's bank. You'd only put it in your bank because your bank simply pays better. But not only does it pay better, it pays you uninterrupted compound interest. The eighth wonder of the world, the most powerful thing in the financial universe, says Albert Einstein. Those that understand compound interest earn it. Those that don't, pay it.
Better pay up, Simpson.
You're tapping into that eighth wonder of the world. You're also tapping into it where all the interest the insurance company pays you in interest and dividends is tax-free if built properly. It's also protected against judgments and lien. It's also liquid, and you can use it or collateralize it or leverage it. That's right. And then the best part is someday when you graduate from this amazing life and you go on to a better place,
let's put some leaves on them and go get some ice cream.
Somebody receives a windfall of money called a death benefit, tax-free. That somebody's your family, your kids, your children, your grandchildren. They live a better life because you decided to change one thing. Folks, if you want to learn how to do this, watch the 90-minute video. It's right here. Check that video out like I did. It will change your life. But once you watch the video, set up a time to talk to us. Schedule a call right after so that we then can walk you through this process that I just explained. And that will change your life. It will certainly change your financial life if nothing else. Folks, I hope you enjoyed this episode of What Now, What's Next. I hope you all want to become your own banker. And if you want to learn more, subscribe to this channel and click that little bell, smash the bell to be alerted every time we go live and do a new video. We'll see you next time.